right, welcome to Investment Banking Insights. This is the only show dedicated to helping you learn both the technical and the non-technical aspects of the investment banking process. Hello, my name is Alex Mason and I am your host today. I want to talk to you today about this concept of EBITDA. What is EBITDA? You may have seen this before. You may have even read the definition, but not understand exactly what it means. Well, have no fear. Today, we're going to talk about this concept and break it down for you. So let's go ahead and break out the whiteboard for this one. And essentially, what is EBITDA? We're going to go ahead and define this. So EBITDA is EBITDA. So this is equal to earnings before interest, taxes, depreciation, and amortization. Okay, so that's what EBITDA is. But what does it mean? So we can recall our income statement. And if we look at it and break down the different components, remember we've got revenue, there's your cost of goods sold, there is your operating expenses, you've got operating profit that comes out of that, then you usually have some kind of interest expense, some kind of tax expense, and after subtracting all of those, you get something called net income, which is the profit of the firm. Now, the thing is, the net income of the business, you've already filtered out all this stuff. You filtered out interest, you filtered out taxes, you filtered out other types of expenses like depreciation. And if you're comparing the net income of a company from year to year, it might fluctuate wildly depending on what the tax rate was that year, what the interest on the debt was, and also if there was a big depreciation or amortization charge, that could fluctuate the earnings significantly. But what this concept of EBITDA is it's taking a couple of steps backward and saying, you know what, let's look at what the business is earning before all of those, not random, but non-operating types of expenses are, so that we have a good sense as investment bankers of what the business is able to produce in terms of cash flow. Although this is not actually calculating cash flow, we can think of this as a proxy for cash flow, because we're taking a step back and looking at what the business is making before all these different types of non-operational expenses. So if you think about it, like this operating profit, this is also equal to EBIT, earnings before interest and taxes. So it literally falls before these interest and tax expenses. So EBITDA is kind of a step before that. The DA part of EBITDA, the depreciation and amortization component, these are usually not explicitly stated on the income statement, but they're hidden in here somewhere. So this is where your D&A is, D and A. And so EBITDA is actually your EBIT or your operating profit plus your depreciation and your amortization expenses. So that's how you get to it. And in terms of what it means, it's a proxy for cash flow of the money that a firm makes operationally before other types of expenses are taken into account. So while this might be your net income type of chart for EBITDA for the same company, you might see something a little bit more consistent, because you're kind of walking yourself further back in the income statement and trying to understand from just a pure operational perspective, what is this business making in terms of how much money it's making. Now, there's a lot of disagreement in the asset management world, for example, about the usefulness of EBITDA, but the fact is that in investment banking, it's widely used as an industry standard, and we'll see with valuation later how EBITDA is important for different ratios for valuation. So that's just what it is. But it's just one of those tools that we have in our tool belt as investment bankers to better understand the financials of a business. Okay, and that's what we got today here on Investment Banking Insights. And you know what it is, we're just living life, loving it, learning as much as we can about investment banking. Thank you for liking, for following, subscribing, all those good things wherever you're getting this content, either on YouTube or on the podcast. And I'm really grateful. So thank you so much, and I'll see you on the next one.